What's not built in is if there's a really strong recovery in ride sharing. And look, the Uber Eats business is doing phenomenally well. They'll probably sustain triple-digit growth for longer than people realize and longer than the market expects. It's the rides business, which I think expectations are very reasonably and pessimistically set. Rides I thought was going to be a V-shaped recovery early on. That's clearly not the case. The question is whether we get back to a full recovery in the back half of 21 or we have to wait till 22. So I think expectations are reasonably set. You're right. There's this big trip-up issue later this year. If they don't get this stay, they're going to have to shut down California, and that's probably low to mid-single-digit percentage of their revenue. So that's a material issue. It's a more material issue for Lyft, however. So there's a lot of issues around Uber. It's a high-quality asset in large-cap internet that's dislocated, and there are very few of those. In fact, I think it's the only really truly dislocated stock in large-cap internet that's high quality. That's why it's our number one long, despite the headline risk and the material fundamental risk near term.
I'll also touch on Facebook. We're not talking about the boycott anymore. 2-3 weeks ago is all that we could talk about. Is that your sense because the boycott's not so much a real thing for them longer term? Does the retail news that we got today in a way provide more tailwinds for Facebook because, hey, you got to reach out to those digital customers somehow?
So, look, all of these ad platforms have been tested by COVID, and we've learned which are the most resilient and which are the least resilient of the ad platforms. Go across the spectrum. I'm talking about Google, Facebook, Pinterest, Twitter, Snap, et cetera. And it turns out Facebook was the most resilient ad platform. They had the least deceleration because they've got a really robust direct response advertising solution. They serve 8 million advertisers. And there's always somebody willing to sell you something in your news feed. And there's 8 million advertisers that compete for your news feed. That makes the ad platform more resilient. And then in the back half of the year, there's two other things I'm really interested about Facebook. There's two things we're focused on. Political campaigns, which we think can add a point or two to the growth rate. You're seeing a lot of political ad spend on Facebook. And the other is the rise of social commerce. We're seeing more and more activity like that occur on Instagram and Facebook, which means that CPMs or cost per impression ad rates can go up for Facebook near term and long term. So we like Facebook, and also in terms of valuation, it's one of the cheapest on a growth adjusted basis.